cannot go wrong one. Valuation so low, somehow government pumping. Walao, what else do you need, man? Whack lah, throw the kitchen sink. Don't kunyang already.
Do you really feel like really like this time is different? Because we have seen like this kind of like rebound over the past 2 years.
Now like everything got China inside. Wow, chiong ah. Then the pump not enough. Never mind, I have another pump.
20%. Okay, Bangkang, 20% CAGR. I'm done with this stock counter. I'm going to find the next 20%. Welcome back to another episode of the Backholder Pod. I'm not too sure how many of you have been following or how many of you have been backholding. I guess the basket of stocks that has gotten a lot of, attention is really in the Chinese equity space. So I think long story short, for those of you who are interested in terms of the breakdown and more details, I'm just going to quick plug my own video. I actually made a 2-part series, so I'll leave the link in the description below. If I were to summarize the entire episode of why the Chinese stock market really went through that crazy rally, like really, really intense and tremendous rally over 1 week. And if I were to summarize everything, the entire episode in one sentence, it's basically them pointing the middle finger to short sellers. I think that's how I would summarize it. So they came out with a lot of stimulus measures. They lowered rates, the reserve requirement ratio, they pump liquidity, they increase credit, they even come up with some special program to tell companies that you can borrow at a very cheap rate to buy back your stocks. I'm going to start allowing for some of these intermediaries like stockbrokers or whoever to pledge their assets, to borrow more money, to go and buy more stocks. So these forms of measure really sound very foreign to somebody, especially for people that have been stuck in this bear market for last 4 years, because they always think that the Chinese market just keep going down. And there were, I guess, quite a lot of people profiting from the short selling and the downward trend. But I think long story short, they announced a range of measures and the stock market is front running a lot of these expectations. We don't know whether it's effective or not. I think want to put that caveat there. But I guess based on how we are looking at how things are being priced in, people are definitely getting very excited. So I think I'll just open the floor to maybe Bunti and we'll have a discussion around it.
So Chiking, you have been investing in Chinese stocks for quite some time, right? So I'm sure there are many friends that will, share with you their views or their outlook on Chinese stock investment and also get your opinion, right? So how many friends have reached out to you and talk about this bull market, China bull market?
You mean just the last week?
Yes.
I can tell you that over the last 4 years or so, there were people on and off coming in and out, but I can tell you a lot of people gave up halfway. I'm quite sure a lot of people are not positioned in their portfolio to capture this bull. In terms of friends wise, I mean, there are a few that just pinged me in a way that, hey, wow, your position started to get green, blah, blah, blah. But I think a more interesting fact that I've gotten, at least over the last 1 week or so, is suddenly, LinkedIn, right? You know how many people visited our profile, right? That one went to the moon. That's one. So basically, a lot of people started searching for my background, and I think a lot of people started chancing upon my newer videos. And I think secondly, also a lot of people started writing in emails and writing in messages, DMs, whether is it through Instagram, Twitter, whatever, to talk about things lah. So it's basically a lot of attention. But if you talk about like close circles, meaning friends, I think quite lukewarm, to be very honest. I think a lot of people probably still skeptical. They're just taking a look and see approach. A lot of people have been burned. I think let's not discount that fact.
Do you really feel like this time is different? Because we have seen like this kind of like rebound over the past 2 years. It went up and then back down again, up and down again. But this time it feels like the FOMO is real, right? So at the time of recording, I think China they are celebrating the Golden Week. They're having long holiday, and then there's all sorts of all these news talking about people opening account. They are like the entire the stock market and the participants, right? They are really excited, including institutional money, retail investor. They are all just have a feel that, okay, I cannot miss out this round already. I have to buy, I have to open account. Then some of them could be, like, I don't know, youngster. So it felt to me, it's like similar to the situation during 2021 US stock market, where US government just give the stimmy checks and then everyone just like, going crazy, go YouTube, watch all these influencers and then just follow other people's pick and just invest in stock market, right? Then we have that huge rally. So just want to get your view, right? Do you feel that this time is like the true bull market that's coming? Or is it just, like short term and then we will get disappointed right after the holiday, for example?
I really do think that this time is different. But let me caveat this a bit because I'm very scared. I need to be careful with my words because I don't want people to, because Chee King say this time is different, I'm gonna tomorrow throw in kitchen sink, leverage my whole portfolio. I'm gonna catch this Super Bowl. This time is different. It's really on multiple, I think you look at it from different degrees, right? I think firstly, it's the support there. There's a change in tone, change in the way people speak about the economy, speak about the stock market. I'm talking about officials here, by the way. I'm not talking about all these people that are FOMOing on what. It's really just a different stance coming out from the that time there was a joint conference on Tuesday between the three people, right? And they really, I guess they're trying to hint to people that, hey, we are stepping in to stabilize the market. How they implemented the policy, telling people that if 500 billion is not enough, I can loan you another 500 billion. Meaning to say this is a unlimited bandwidth for me to lift my market however high I want. Of course, I'm not saying that the market is going to double or triple from here again, but at least my view is they're going to stabilize the market, meaning they're going to put a cap. They're buying puts on themselves. So if not enough and you're there to push the market down again, I'm just going to unlock and to hold the prices there. So holding the prices doesn't mean that the market will double or triple from here, but it do mean that they have some sort of control, because let's not forget, it's still a command and control economy. So that's on the first front, the first degree, when you look at it from a government policy perspective. I think on the second part really is, I think the timing is also kind of interesting, where the US reduced Fed. The timing was really very impeccable. Once the US announced that 50 basis point cut, right? Then that was right after it was followed by the meeting, and then they start saying that I'm gonna QE infinity and all those things. So I believe previously, back then, you can probably argue that, hey, 2022, 2023, the Chinese economy was bad. Why you didn't reduce rates? Why you let so many people lose their jobs and people feeling poor? But let's not forget the backdrop of that was globally, everybody was experiencing inflation. Economy was probably not doing very well. I wouldn't say not very well. I think it was very fragile. So it was a very fragile economy. And if China starts opening this QE infinity, I don't know what would be the repercussion. But I think after tiding through what has happened over the last 3 quarters or so in 2024, you get a confidence from the Fed saying that, okay, maybe economy is a bit shaky, I'm going to lower our interest rates. And then there was also the kind of the green light where, hey, I'm going to step in and China, it's my turn to save my economy. So I think the second degree, which is when you look at the timing, I think it's a lot more convincing compared to maybe last time. You might get a lot of conflicting viewpoints saying that, what happens if China does this and then US do this, then what happened to the rest of the world, etc. So that's the second part. And I think the last part really is you are working in the backdrop of really, really dirt cheap valuations. I think you don't even need to take a finance class. You just look at some of these lines or some of this infographic being produced, right? Let's take Hang Seng, for example. So you have a few of the indexes, right? The Hang Seng, the CSI 300, you have the MSCI, whatever it is. Hang Seng was trading, you want to take a guess, back then at its lowest, right? Like before this crazy rally. The S&P, I don't know, was trading at around 24, 25, 26 times, right around there. So just go around the table. Eric, maybe you want to guess Hang Seng at I wouldn't say the bottom, but at the lows, how much was it trading around? What do you think?
I guess 7.
7. Bunti?
I think about 10, but right now probably around 14 already.
Yeah,
But it's not just China is that cheap, right? Because other emerging market are also similar level. Only the US one that is, and India
interestingly,
is the one that is
India,
very high.
I think Japan, even Japan, when
Yeah.
we talk about population crisis, whatever nonsense that they have, it broke all-time high. The Nikkei went to the moon. So I think just to put things into context, right? Yeah, the Hang Seng was around 8 to 9 times earnings. And you're talking about companies that are probably also globally recognized brands, and they're still printing money. They're not loss-making company. That's why you have a positive PE. And if you look at the standard deviation, it's like near 2 times, even, I don't know whether it reached the 2 times, nearing to 2.5, 3 times standard deviation. So when you look all of this context, right, despite this, before you talk about this super rally, we are kind of primed. It's like a Pepsi you keep shaking, right? Then you're just waiting for somebody to open the cap, in a way. And of course, I think really a very big caveat here is that if you didn't position earlier and now you're trying to chase because you feel FOMO, I think that's a very dangerous premise to start out, regardless of what market it is, whether it's the US, Hong Kong, whatever. You can probably argue that, there's still a lot of stimmy checks coming, the valuations are still attractive and whatnot. But I think let's try to ground ourselves in the logic where what happened or what are the risk factors here. And when you look at really the risk factors, when people argue about policy risks, VIE risks, I don't know, company corporate governance, etc., etc., I think all these are still present, and the delisting and whatnot. After 24 hours, after that joint meeting, I think risk factors are still there. So a lot of people are getting very ahead of themselves, and because they don't want to stay poor, as in they want to chase this rally, right? So that's a very big concern where let's not lose our flow and our logic and our temperament here, and try to reevaluate everything properly before you make any moves in a way.
I think you summarize it very well. It's all like they want to give confidence, they want to pump the market, right? You don't want to, like, as a policymaker, you say now my direction is towards, like lifting the economy, and then I try to, like infuse all this confidence, then people just don't believe you, right? That's even worse, right? That's why all these words about like, wow, 500 billion not enough, then I just double again. This kind of words is really like telling people that you should have confidence on us, the policy, right? So I think the stock market is also excited, and we can see that all the charts are going up and then trading volumes are there. Maybe Eric, you want to share a little bit on your research on this?
I think TA wise is resistance here about $100 with very strong volume, and it's more really like what Chiking has said like the all the stars are like seems to be aligning for this push from China. And I think previously when they start to do some stimulus here and there, right, it's not really working because the stars are not aligned. But this time round, when they do it, it's like it coincide with the US side, also the Fed cutting the interest and all that. Of course, we need further confirmation. The next technical hurdle, right, is like what Chicken has pointed out, is about 120. So if we break that with volume, I think the bull market will be well and truly underway. But it goes against like conventional wisdom. Like if for me, right, I think my one skill that I'm pretty proud of is that I can somewhat identify breakout patterns pretty well, right? Even though I'm not invested in it, I'm just a bystander. I'm looking at it. Like the other time, Nvidia, I saw the breakout. I was like, bro, this is it. There's no resistance. Everything is like just clear skies. So people are just buying. Is just hold on, no? You don't know how far it go, ma. I mean, we were predicting it stop at 600, 700, those kind of thing, right? But those are for fun one. We don't know where it will stop. Eventually, it went to 1,002, right? Something like that before it split. So this time round, Baba, does it have a resistance? Yes, absolutely. The next one is about 120. And then after that, we have to see how far it can run. Everything, right? Everything with a scent of China in it. I look at my Capital Land, the China REIT, right? It's like it's just barely China. Then now like everything got China inside. Wow, chiong ah. Then the past 1 week, you see the stock price got one day it pump up 10%, right? I was telling you guys I was a bit shocked because REITs, local REITs, they very seldom one day pump 10%. It's like got to be some crazy news. And this wasn't even directly like, I don't know. I mean, the malls are in China, but to pump 10% in one day, that's some sort of crazy. I was telling Chiking that I believe it's more like institutional buyers coming in, because mostly those speculators, they won't come to speculate REITs. Like if you want like the more liquid ones, Baba, Tencent, Pintoto, whatever, all that, even the China banks, I think they will have some sort of players inside there, sharks. But REITs, only auntie uncle lor. You come in, you buy out, you are the only one pushing. Why would anyone want to do that? So the only reason I can think of is maybe institutions or whatever funds, pension funds or whatever, they feel that this time round the stimulus is going to be really strong, and the Chinese government come out and say, okay, I allow you to buy back your shares. Like it becomes a infinity money loop, right? Your dividend 6%, 7%, then you can just borrow 2%, buy back your shares, and then you can just keep doing that. Uh, so I'm not sure how this will turn out, but I sense that this very bullish. I don't doubt the Chinese government's resolve to do anything. So when they say that we are going to shoot you down, we're going to crack down on big tech, better believe them lah. They will do it by hook or by crook, and they'll do it multiple times over multiple years. Until some people, I think we are like so tired out by it, right? Even I'm not vested in China directly, but I feel tired just looking at them crack down. It's like, hey, when are you gonna end all this? But this time around, if they turn 180, I think we got to give them some credibility to that, right? We believe that they will do what they say. Is whether or not the market buys it. I don't know. Like, do you guys buy it? I certainly think that they are very determined, and the Dongfeng seems to be just nice this time.
But this Eric, so bullish on Nvidia, didn't buy, then bullish on Baba, on China now, also not doing anything.
Hey,
So
what
will you consider?
the reason why I say that, right? Because when I look at this breakout patterns, right, uh I'm very afraid for my own emotions. Like I cannot keep them in check. If I'm become vested, right, somehow my clarity will get clouded because I wish for it to go up. So if I see red flags, I cannot objectively look at it.
What is special about you is that you don't have positions. That makes you more
I
neutral.
don't have a I don't
Uh,
have a direct position, so I'm just like by the side. I'm thinking,
yeah.
oh wow, this looks like it's pretty lined up, the stars.
Yeah, yeah. So how now? So you see, like you talk about like all the policy uncertainty now becomes certain already. You talk about the direction from rectifications now to pump the market, pump the economy, hit the target, GDP target, everything's.
Yep,
Talking about valuations, still sweet valuations because
very
although
low.
it just like shoot up like don't know how many percents are depending on which stocks, which index that you look at, but it's still very low compared to let's say just 3 or 5 years ago, right? Still cheap. Valuation multiples still look attractive. But what's the downside here? What is the like the bear argument against this entire China thesis now? Eric, do you have any things that you might be feel like concerning? Because this one cannot ask chicken confirm 100% bull one.
um I think the only thing that you need to really be scared of is if you buy it at the crest, or if it pulls back very very sharply, um you emotionally you may not be able to take it lah. Some people say, oh no, this money I don't need one, but only when you see your speculation, your investment suddenly pull back 50%, wow, seriously, that time you really will the feeling is very different when you're vested heavy. Like you feel very bullish, then you whack in heavy. Like I think some people look at this setup now, right? They say cannot go wrong one. Valuation so low, somehow government pumping. Walao, what else do you need, man? Whack lah, throw the kitchen sink. Don't kunyang already. Don't slowly here and there. So they whack, right? They whack. Maybe they take margin, leverage everything. But the thing is about it is the emotional control. Like what I say, even if I buy in a little bit, I will be clouded one. I know myself. I'm not the sort that I can play breakout so easily. If I'm sitting on the shares since like donkey years, right, I'll be okay because I have it for so many years already. Like Tesla, you pump until 400. I also don't really care. Like okay lor, because I have it for so long already. I'm numb, kind of like numb to it. But if I come in and chase this Baba now, I know that if it pulls back 50%, I'll be like, maybe I'll private message Shiking and ask him to give me some hopium. Yeah, so that's the danger I see.
Yeah.
Like when you try to time and chase the market, it's very conflicting, I know, because
Yeah.
it's a bullish, very very bullish now.
Yep.
It's like at the start of the green curve, like
We
you're
bring in
afraid.
the image of we are here. So
Yeah, you're afraid of missing out, you see. But I think like what Chicken say, right? We cannot lose our bearings. Once you
yeah.
lose it, then you'll be like a deer in a headlight.
Yep.
Like people won't know what you're going through, and then you're like, how am I going to tell my wife I leverage 200%?
When you're talking about playing a lot of all these rallies, right? If you're I think you need to be very clear on whether you're trading or you're investing. Because when you're trading, there is stop loss. You can use options. You can have a predefined, the amount of money that you're willing to risk. And not to throw the kitchen sink leverage and go all in because you're scared that you miss this once in a lifetime kind of opportunity. So
Mhm.
then the funny thing is, why back then you didn't buy and then you wait until now? Because I don't know, you can have a whole host of reasons. You wait for breakout, you wait for policy confirmation and whatnot. But if that was really the case, meaning you're not trying to find an excuse to justify your previous inaction, and if you really were waiting for some sort of confirmation, then that day, when that day came, you should have already entered, like on Tuesday. Like it shouldn't be until 1 week later when everything pumped like 50%, then you'll say, hey, the confirmation finally came. I don't think that's let's not also kid ourselves that like especially when there's a lot of greens, right? Or in the reverse when there's a lot of red. I think it's even more important to stay logical and to keep yourself composed. So that's on the trading front. Now the investing front, of course, you have your traditional philosophy, what's your rules, what's your entry and your valuation, blah blah blah. So that's a different art altogether. So don't mix both of them together. Like if you're trading, you're trading. If you're investing, then take a longer term view and do your proper valuation and whatever works that you need to do, like your investing works that needs to go through the process.
But I said, cannot be 3% boom. So I have to play the bear case a little bit here. Okay. So I just want to draw parallel on current situations versus the US after global financial crisis. Specifically, it's like 2008, 2009, after the whole thing crashed, right? And then we can see that people are losing their jobs. And then that's when the bazooka moment for US, right? So they came out and then they say they're going to do like quantitative easing, all those things. So I think it's similar because all these are policy driven, and in US case, it should out also not sure as much as China situations. It's more like okay, the central bank is trying to pump already, but the situation was still quite bad. And hence the recovery was actually quite very slow. It's like even 2010, 2011, 2012, 2013, people are still skeptical and people are still saying that this is not a good time to enter because the economy is very bad. Now come back to China case, right? I think that the current situations, why they have to do all these things so decisively, right? And so forcefully, right, is because I think the situation in China is really bad. And but this bad is not like recent 1 month kind of bad. It's really like lingering for a few years already. And now it's already a situation that become quite worrying. So the first chart that he's trying to draw here is that the Chinese real estate is really bad now. So we can see the charts, right? From 2008, just going up. And then recent few years, because of all these three red lines, all the policy changes, even how many property developers already went bankrupt. The situation is very bad. Like you look at the charts also, it's like quite scary one. And then the second one is like all this talking about like economy-wide prices longest decline. So what this is saying is actually like, okay, now we are experiencing deflation, and then deflations usually you mix it together with the recessions, then the situation also very bad now. And then I think that there's a lot of others, like even Ray Dalio also mentioned that the entire economy needs some restructuring, and then consumers, they are not confident to spend, they are holding their money. So all this, like liquidity is not flowing in the economy now. Just to bring up all these few points, I know that they are not like new. All these things bad, right? They have been bad for years already. Just that now suddenly just a big U-turn. I think that's the one that surprised people, right? But we cannot just say that, oh, because of all these new policy that come in, right? So everything that we have seen, right? Like all the real estate prices coming down, job losses, all these things, we just like, ignore them altogether, because I think the situation is still bad. And I think policy will help. It's just that it will take time for all this policy to kick into the economy and jumpstart this growth again. It won't be so fast. I think that's my feel. That's why my concern when coming to viewing the stock market, because I think when the price went up like crazy, right, we are just looking at the positive things and we might ignoring the negative things, especially if we have exposure. That's my personal view on this. Comment?
Nothing. Completely agree.
Now
What
switch to
comment are
bear
you?
already. Three bear talking already.
Okay, I think in terms of what you shared, yeah, it's true. But we must remember stock market, right? Sometimes it's irrational. Yeah, going up, going down is the same one. Like you go up, you can have 100 reason to go up. You go down, you have 100 reason to go down. So if now we are going up, right, and then you bring out the 100 reason, can people choose to ignore it? Yeah, they can, absolutely. So it really depends on what is because we know that, yeah, China shares, they are more or less determined by the government's policy, the direction, like property market and all these things. So they can come in and crack down if they feel that it's overheated. But now they feel that it needs CPR. So they go in and pump lah. They go and
Yeah.
pump lah. They say pump not enough. Never mind. I have another pump. So so I I don't know. Like, do you want to fight against this kind of declaration from their government by showing them like, oh, your fundamentals sucks, and then this and that? Like, do they really? I don't know. Like, does it really matter? Like when the stock multiples were expanding like crazy, right? In the 2021 market, nobody cares about the fundamentals. Who cares about how much cash you have? What is your free cash flow and everything? It can be tiny, but your multiples are like few hundred. Nobody cares until like the tune change and everything, and then everybody start caring.
Mm.
So it's a matter of where you are looking at, I feel lah, for the stock market. So sometimes if we look too much in the opposite direction of what majority of people are looking, because they are dancing to the tune of the drum by the government, then you may find yourself going against the herd unnecessarily. Contrarian just for the sake of being contrarian, like fighting the trend. Protect yourself, position size properly, don't FOMO too much, but at the same time, make hay while the sun shines, because the sun doesn't always shine.
So means what? Must buy lah.
I mean, 适可而止 lah. Like,
这个
you know, you be prudent. Uh, you know your own system. You know yourself. You know whether or not you will be FOMO. You will be clouded by this and that. Like, I don't know whether is it a thing to have an accountability partner in investing or trading, but somebody that can be your sounding board, somebody that knows you well. That, Eric, I don't think you are the sort that would invest in China stocks and all that. Why do you suddenly get in? Like somebody who will call you out, you know,
Mm.
somebody trusted lah, that you can think that, oh yeah, why am I so like blinded by all this, and then take a step back and think about it. What's the saddest thing or not? The saddest thing is the market can be very bull, right? But you buy in at the wrong time,
Mm.
and then the market inevitably will pull back, like what Adam will say, right? Market breathe in, breathe out. When you breathe in, you chong in, then breathe out, then you buy too early. Never mind. I sell first, then after that 2 weeks later I buy back again. Then you keep, you know, your emotions play you out lah. It's not the market play you out, the emotions play you out. That's the most sad part lor. You lose money in a bull market.
That's why not easy to be a trader. If you don't
Definitely.
you don't ride on trend, you also won't make money. You ride on trend, you need to have good implementations. But for us, I think like Chiking and myself, we all invested in Chinese stock for quite some time already.
Mm.
So the buy and hold is the easier executions. You can just I don't even check my price. Suddenly it's like from red become green already.
This one I disagree. This one I
Disagree on what?
disagree. The buy and hold thing, right? I think it requires a certain type of personality because, like I said, right, there were a lot of people that boarded the bus and they exited the bus, and now they're trying to buy the tickets to come up the bus again.
But
So
if
actually
they
holding is-
rebought at a lower level, then that's fine, right?
then they will exit the bus again before the bus even went up the hill. I
Okay.
think that's also an important factor. I mean, going back similarly, I think to many of these massive rallies, you look at 2022, all the big tech, both of us were invested in Semicon. TSMC, even your Nvidia, I didn't bought the bus and it went 10x when you were telling me to buy. But because I didn't really understand, so that was a philosophy thing. But we all know that the Semicon also went through a down cycle. Who are buying? When you have negative revenue, what people call you xiao for buying into a negative. Similarly, Amazon, negative free cash flow. Why are you buying a big tech that is losing money or every quarter keep losing money? China tech now or whatever, Chinese companies, why would you buy? The government is crazy. Like I mean, you can have so many reasons And especially and even similarly, I think Meta, like when we went through that whole down cycle again, the interesting thing is this: like you can say that you can sell at a decent level and then you get back in at the lower level. But what you can really see, I mean, online or even people around you, a lot of people get off the bus very early on. You don't see that multi-bagger. You just 20%, okay, Bangkang, 20% Kager, I'm done with this stock counter. I'm going to find the next 20%. I don't know. I mean, that's a difference in philosophy. But I can tell you that people that keep tapping in and out with their EasyLink card, I honestly I don't know at the end of the day whether they are net better off or not for tapping in and out so quickly. So actually holding and that idea of inaction in and of itself is also a skill set. I think to circle back to what Bunti was talking about, there are a few things that we have to consider here. I think firstly, a lot of all these factual economic projections and summary and whatnot, right? You kind of need to remember that the stock market is not, it might be linked. There are factors that are linking the stock market with the economy, but it might not necessarily be a one-to-one. In fact, I would probably argue that it's not a one-to-one. There's a lot of other factors into play, which is, for example, like expectations, what people are expecting moving forward, and what they've already expected previously. So when I painted the backdrop just now at the start, when I talk about like what are the multiples, what are the standard deviation, and what, it means that extremely bad expectations, like the factual things that you talk about, are probably already priced in pre whatever announcement that comes in. So now a lot of people are just trying to front run, meaning to say they're trying to expect, okay, this credit event, sorry, I shouldn't call it credit event, this pumping of the market, like to leverage on the balance sheet of the Fed, what's the resolve? How determined is the government? And how much are they willing to allow for this sort of leverage? So of course we know that it's not sustainable. So it has to be backed by earnings. At the end of the day, 你借钱你要还的. You have to pay back down the leverage. So the underlying company has to be healthy. It needs to generate cash flow. It needs to be able to pay back the bond or whatever that they issue. So that's point number one. Number two, a lot of people are saying that it's a pump and dump, right? Chinese equities now, they are going that pump and dump scenario. So the pump is coming. How far can it pump? I don't know. So I think I presented my view that I do think that they are really serious in stabilizing the market. So stabilizing is there's a nuance there, you know. So by stabilizing doesn't mean that you definitely earn money. But I can kind of argue in a way that you probably wouldn't lose a lot of money, meaning they put a cap to your downside. But of course, as investors, you don't want to just look at the downside, right? Meaning I put into an investment, 10 years later, I don't earn money, but I don't lose money. Then what's the point? So you also want to take into consideration what's the risk reward, what's the potential reward, what's your Kager, blah, blah, blah. So that's also another nuance. But of course, for people that position earlier, you're probably sitting at like 40, 50, 100% gains year on year. Then kudos. Then you are absolutely great in your investment timing and acumen. But how many times can you repeat the process? So that's the second idea of investing as well. Then I think the third part really is, so we talked about stock market and economy. We talked about expectations being priced in. What's the expected risk reward? Then I think really the last part is how does it fit your entire portfolio? When you talk about buying the Chinese equities today, like what are you buying it for? Meaning to say you expect it to double again because it's dirt cheap valuation. You think the companies that you're buying, for example, Tencent, Baba, are they gonna continuously improve on their business? Why? Like you need to at least have a fund. You don't have to write a 10-page report for me, but at least have some sort of an idea of what the business is doing, why you think WeChat is going to continue dominating, why Baba, why Tianma, why Taobao will continue dominating. You think the stimulus is going to work, people are going to spend more money, or what's the environment moving forward? At least have a rough idea. You don't need to be very, very expert in the company. But I'm talking about this from an investment perspective. If you want to trade, look at your RSI, look at your moving averages, whatever it is, please go ahead. So I think that's just my three like main points on this discussion.
But it's okay. If you don't know about all these things, watch chicken videos. Confirm got cover one. All these Alibaba, Tencent, confirm Haidilao. So we'll miss out.
I can tell you that there's no. You see, here's the interesting thing, right? So I've gotten a few messages over the last 2 weeks, right, or 1.5 weeks that they're thanking me for your videos and whatnot, keeping sane on the hopium and stuff, right? The funny thing is, people, I feel like Eric said, right? We are all irrational creatures. We are reinforcing. So I keep telling them my message is always clear. It's always the same. You don't need to thank me because at the end of the day, I don't control your buy or sell button. The brokerage app is yours. So you can listen to whatever I say, but at the end of the day, still sell your stocks or buy even more. And I can tell you that a lot of people that are near me, they're off the bus. Close to me, people that are close to me, they're off the bus. But the funny thing is, people that are across the globe, that are even not Singaporean, they are across the screen, they are watching a video, they're still on the bus. So it's not necessarily because I was there, that's why you're on the bus. You want to believe that this bus is going to a destination. That's why you keep looking at content to keep you on the bus. So don't try to credit people and say, oh wow, good timing, wow, good content, wow, your art, your foresight is damn good. It's not me. It's yourself. You decided to stay on the bus because nobody can force you to stay on the bus. That's really just my own, I guess, revelation over the.
I'm just curious lah. Like, what do you think is the average price of the long time Baba bag holder?
I would say, right, or at least from how I look at a lot of people, right,
Hmm.
a lot of people didn't go in at pre 300, or people didn't chase all time high because those that chase all time high already exited.
Yeah.
So a lot of us started buying, I would speculate, 200 to 250 range. That was your first entry.
Yeah.
So those that given up halfway, they would have exited in the 100 plus range. Then those that continue averaging down, for God knows how long, for the last 3 years, I would guess a lot of the accumulation of the average prices would probably range between 120 to 180.
Hmm.
So that's why the 120 is a very big, could be psychological resistance, could be technical resistance, could be people just exiting saying, I'm done with this nonsense that, wow, 3 years really, at least I come out break even. I think that's why the 120 is a very key support, that, or key resistance, in a way that whether people can break through or not.
Yeah.
But I think if we really focus back down to what the business is doing, what's the valuation, and how what's your thesis moving forward, right? I always have been jokingly, I think I've been public to a lot of my, on many multiple occasions, that even at today's valuation, I think Tencent and Baba still double. I don't want to use the word easy because then you say, oh, I'm a toxic bull lah. Wow, this guy lost his way. But I think I also shared with Bunti privately before the other time. And I don't say my hope out. Don't say my cost back cannon or what, right? Like, I think I did tell you before that I think Tencent was easily $1,000 stock. I don't want to put a timeline, but back then I think Tencent was still going down like 200 plus. I say it was like 4-5x should be no problem. I'm taking a very long-term view here, but I do think looking at the business potential and looking at how Baba and Tencent is executing, I can't fathom, or I can't understand why is it even valued at these prices today, or at least back then when it was really rock bottom level.
But let's see, because now all these policy changes just announced, right? So now we are in October. So I think all these things, let's observe for the next, let's say, like 2 or 3 quarters, then we will start to see some changes in terms of the confidence, or all those things will flow in. And hopefully that will really, kickstart again. And hopefully China is not getting into a recession.
So markets are excited. Investors are excited. But I think as a viewer of Backholder Pod, right, it's not necessarily something that, I mean, Eric is quite skilled in breakout patterns and technical analysis, right? But I think he doesn't congregate his entire portfolio into trading. He's not a trader. He's still I think 90%, 95%, maybe sometimes play with itchy money, sell some call, sell some put, whatever it is. But we are all still long-term investors. So we hope that, I think, in this whole FOMO market, right, it feels very exciting and you want to chase the highs. But I think it's still more prudent to look at things in totality. You can allocate whatever play money that you have to punt for a lot of this volatility, but still ground your retirement nest egg, ground your investment portfolio in a particular philosophy or understanding that should work for the long term. You shouldn't just, today's China is hot, that's why you all allocate to China. Then suddenly, like Eric says, tank 50%, you wouldn't know what to do. Even though I am of the opinion that it wouldn't tank 50%, but it's not a financial advice. I'm not telling you to, because I don't see downside, that's why you can go all in. I don't think that's the message that we're trying to deliver. But if not, I think there are definitely always opportunities out there. I don't know whether you guys heard of the exercise before. When you always look out for things in red, right? Then you always look out for red, but you forget about everything else. It's the same as when you only look for Tesla cars. You only look at, wow, there's a lot of Tesla cars, but actually maybe not as much as you like. So similarly, when everybody's pointing that, they're waving their hands and saying that, oh, everything is about China stocks, maybe not so much. I think there are still opportunities there. You can do your own due diligence, you can do your own homework, but I think just don't get the feelings part will kill a lot of people. I think that's my my final sentence. If not, that we'll see you in the next video and hope you enjoyed the discussion.
China to the moon.
What